You know what we haven't gotten in a while thanks to the government shutdown? Job data.
We're going to go to Steve Ratner, who's going to be talking about the K-shaped economy, this period we're going through. So, Steve, you bring us the charts this morning on the health of the U.S. economy, and your first one shows how economic growth is uneven. Explain.
Yeah, Mike. So we've had economic growth now for a number of years, and it is continuing. But there are two things happening with economic growth that people should be aware of. The first is it's generally slowing. It's going from here to here down to just about under 2% in total.
I do appreciate the fact that they have the from AI investment subcategory here. Remember, if without AI investment, US GDP growth is essentially non-existent so far in this year. It's 0.1%, which is not quite a recession, but also, you know, Jesus, 0.1%. And even that's based on data that might be amended later to be more negative, because this job data, it's not just AI like data centers, right? It's everything that's boosted by AI. If you remove the big eight, the top tech companies, we are in a recession. You know, it really just depends on where you draw the line. The economy is not doing well.
From 2.5% in 2024. But what's really interesting is we all talk about AI, and AI is now becoming a significant part of economic growth. AI, back in this whole period here, was only about 10% of economic growth. Now it's 31% of economic growth.
Jesus.
And so the actual growth that's filtering down to ordinary Americans is dropping even by more, and it would be 1.1% in the first half of 2025.
And this is an industry in which there is absolutely no velocity to the money that is invested into it. Okay? This is not like money being invested into Safeway or Aldi's or something where, you know, you build a bunch of locations and you pay wages and a da-da-da. Once the money goes in, that's it. Some people get paid wages, but overwhelmingly this money just cycles up to the top. It's all stock market shit.
So that's happening on that side. And then what's happening in terms of wages for people, which partially reflects obviously that slowdown in economic growth, is that for the first time in a number of years, people toward the bottom are doing worse than people toward the top. You had a whole period going back to 2016 here, where wages for people at the bottom quartile were rising faster than for the rest of the other quartiles further up. And then you had COVID, of course, but now it's gone the other way. And
we did enjoy a period of pretty excellent wage growth under Biden. We did.
So people here in the bottom quartile are seeing their wages only going up by about 3.5% a year, while people up here are seeing them grow by more than 5.5% a year. And so we're seeing now rising income inequality for the first time in a number of years.
Hank Green in a new video showed that all the companies get discounts on NVIDIA GPUs and guarantees of money back, which shows it's all inflated and even the GPU demand is not really that high. Is it fair for me to say I told you so? Now, I'm not saying that like in a you all disagreed with me sense. Usually you're all annoying, but in this case, I think we've all been in agreement. Like this is a masturbatory industry between, it's incestual. Thank you. That's the correct term. You have a couple of mega companies that are all ramping up huge amounts of like shareholder attention, investor value, purported economic growth, but all of it is being done through fake number. You know the joke? Like man creates micronation, population of 2, increases GDP per capita to infinity by repeatedly paying back and forth each other $20 to do tasks, you know? Like these numbers aren't raw, pure indicators of value or of economic health. They're just general metrics that can be corrupted or polluted or made less useful due to outliers. And we are in one fuckload of an outlier right now. The AI bubble is significantly larger than the dot-com bubble. And the dot-com bubble, when it popped, was, as we learned on stream, as I learned on stream just a few months ago, economically disastrous. I had no idea how big that was. Yeah, I've seen this chart. This was a chart made by one of these companies. I don't know if it was Nvidia, but it's an indicator of how much of the money that leads to this inflated GDP growth is just circulating in these same companies, you know, back and forth and back and forth. It's not touching the economy. Like, it's not, this money isn't reaching the parts of the economy that allows regular people to make transactions to support their regular lives. It's very scary. It's quite frightening. Many times larger than the dot-com bubble. 17 times the dot-com bubble. And 4 times the size of the subprime bubble. 4 times the size of the subprime mortgage crisis bubble. The amount of money we're talking about here, it's such a large portion of the economy because of investor money. I'm telling you, and I've had this position for a long time, the stock market should not exist. It just shouldn't. It should. Listen, it's great in the abstract, okay? It's a way of assigning value to corporate ventures and allowing them to get funding. I get it, okay? But in the long run, the problem we keep running into is that you build systems where more of the money ends up floating in investor value and equity and blah blah, rather than circulating, having high velocity. More and more of the economy becomes about investment and debt. Investment, debt, investment, debt, investment, debt. When does it turn into a fucking Crunchwrap Supreme? Money isn't worth shit unless it turns at some point into poop. If it doesn't turn into a poop at some point, it's not real money, okay? Economy exploded, $50 squibbillion spent between 2 companies sucking each other off. At what point does that turn into a burrito? At the end of the day, you have to understand that economics as a system, very broad, I mean, just all economics, right? It exists at the behest of, and it serves the interests of people who have the ability to shape the economic systems, right? Like the people who have the ability to make the decisions about how the economy is arranged are the ones in the long run, like most likely to benefit from it. And as is always the case, here in capitalism, before in feudalism, whatever, you invent systems that prioritize hierarchy, that privilege some people over other people, and everything else is secondary to that. The functionality of these systems and the degree to which they allow us to live our lives is secondary to their capacity to reinforce long-standing economic inequalities and biases. And in this case, again, we're living in an unprecedented era of income inequality. You would have to go back to the pharaohs to find an era of wealth inequality as substantial as this one. I mean, we're talking about like peasantry and divine monarchs, you know? At no point in the history of capitalism has inequality been this prominent. Mathematically, that's not an overstatement. It is true. It is just factually true. Can you briefly explain the dot-com bubble? In Silicon Valley, there were 10 million startup companies, and every one of them had a cute domain name, and we're going to do a quirky like e-market business. And it turns out a lot of them were really good at selling their pitch to investors and really bad at actually making money. And when people realized that, it all fell through. Basically, it's like a smaller version of what's happening right now. I don't know, man. Is there any hope? How fucked are we? Quit with your annoying ass questions. Bubbles pop. So how does the AI bubble pop? Do people just realize one day AI is shit? When if there is a big contract fall off, market like sell off or an undercut, that might be the beginning of the end. Like, a bubble doesn't pop when people realize that investors have been irrational. Everyone already knows investors have been irrational. It'll be like there will be some number that's worse than people expected, and everyone will race to divest, and then all the dominoes will fall because of it. Or like everyone already knows the general state of things, the fact that it's a bubble, and everyone's just trying to make their money while they can. Be the first one in, first one out, you know? But at some point, there's going to be a flip in the vibe. There's going to be a switch, and all the investors are going to realize something. They're at the line right now right now that defines and distinguishes when you got out too soon or too late. They're at that moment. They might be a little over it, they might be a little before it, but whatever the case may be, the line is headed down, and the best option right now is to sell. And when that happens, the value of these shares will plummet. Everyone will be on the way out. There will be one of them market freezes. What do they call it? What do they call it? The thingy, you know, 15 minutes. What is it called? Circuit breaker. Thank you. The circuit breaker will trip. And a whole bunch of value is going to vanish overnight. JP Morgan has been relatively conservative with regard to the AI bubble for a while now, and it's one of the things I actually kind of respect the messaging from their firm for. Not the firm itself, but the messaging. Every other week they're saying the bubble's popping, but they largely stay in. It's getting closer every day. Yeah, I mean, sometimes it takes years and years for stuff like this to pan out, you know? That being said, the way things have been going lately, you know, there's only so much money that can get invested, and the real question is, will the government bail it out? No. The government could not afford to bail out these companies. That's the cool thing. Unlike in some previous like government bailouts, like after the you know, Freddie Mae and so on, and the American auto companies, right? In this case, the U.S. government actually could not afford to do these bailouts. It is not possible. Too big to fail. In this case, they're actually not too big to fail. They're too big to prevent from failing. We're actually reaching. Listen, corporations have never been this big. What we're dealing with right now, too big to save. Thank you. What we're dealing with right now, this has never happened before. Maybe in history there are some examples of like a micronation with a corporation that's worth 60% of the micronation. In the United States, at least to my knowledge, we're dealing with inequities in the stock market that are basically unrivaled in history, and the government simply could not bail it out. Could not do it. East India type shit. I would have to learn more about it. I'd have to learn more about it. Albanian government fell for a Ponzi scheme in the 90s and it imploded the economy. That sounds about like them, yeah. I'm sure Serbia had a great laugh. The market cap for the AI bubble is higher than the entire GDP of Germany. Yeah. Misallocated capital exceeds the 2008 peak. Well, that looks scary. Well, anyway. I just hope it doesn't hit when I'm at retirement age. Buddy, are you like 62? It's not going to take that long.
And your second chart, Steve, gets at why that is. A lot of it is to do with the explosion of the stock market in the last 5 or 6 years, with the wealthy getting much, much wealthier.
Yeah, we've had this extraordinary period in the stock market where you've had in 5 out of the last 6 years, you've had the stock market go up by 15% or more, as much as 30%, 25%. Obviously, huge increases, way above what the average American is going to get. And this year, while the year is not quite over yet, we're also on track for a year where the stock market is likely to go, it's not over, likely to go up by 15%-ish a year again. So that's created an enormous amount of wealth. And that's helped. It's not the only thing, but that has helped fuel this purchasing power, huge rise in purchasing.
There was an article about how, Masaiga, you got to link that, about how a guy did some research into the ROI and how long it takes for data centers to make a return, giving a generous time-year frame for how long hardware lasted before it broke, and was shocked to find out it barely broke even. When he published, he got hundreds of calls and emails from people in the industry who were panicking because none of them had actually bothered to check. I think the smart people, the smart investors in on this bubble, are completely aware of the fact that it's just a big speculative blob. It's like Bitcoin, basically. I can't imagine how stupid you would have to be to buy into OpenAI or Nvidia with the assumption that any of these companies are going to be like the valuation of these companies is in some way going to come down to their actual, like, the returns on their products, you know? That's crazy. Like, if you're that naive, way more respect for the people who know that it's all just a fucking bubble. Oh, this just came out. How do you have time to read all of these, Masaigo? You're always pretty, what do they say, Johnny on the spot when it comes to the news? Is it ground news? Should I get a ground news subscription? I work on power lines and have a lot of call time. On call time? Gotcha. Huh, okay. Using math for my purpose, you need approximately 1 trillion in revenue to hit break even, with trillions more to earn an acceptable return on the spending. Data shows AI use is now declining at large companies. I remember reading this. I don't know if I read it on stream, but I remember reading this. Turns out that all of this was a fucking waste of time, obviously. After disastrous ChatGPT 5, Sam Altman pivots to hyping up ChatGPT 6. Yeah, it's all just speculator value. It's the only thing that matters to these people. It doesn't matter how much food you produce or how many widgets you produce or whatever.
Purchasing power on the part of the very wealthy. You can see if you go back to the beginning of 2020, the people in the top 20% have increased their consumption. They've bought more stuff by 50%. But every other income group has only gone up about 25, which is almost exactly the same of inflation. What does that mean? It means that for the average American, they're really not buying any more stuff than they were buying 4 years ago, which means their standard of living isn't really going up. This group here, actually not this group, the top 10% of Americans account for 50% of everything that's bought in this country today. So think about that. The top 10% of Americans get 50% of the consumption. The bottom 90% of Americans get the other 50% of consumption.
And your third chart is very jarring, especially if you're looking for a job right now. The job market looks rough.
Yeah, the job market is clearly getting rough, and that is unusual when you have an economy that's still expanding.
It is worth noting, and I apologize for doing the hackneyed socialist both sides thing, but neither Republicans nor Democrats have an answer to what's happening here. We're at the precipice of economic catastrophe. We need radical change to have any chance of addressing it. And that means like a nation, a president, a Congress, everyone in lockstep to transform our economy from one built for financialization and speculation into one built for, making food and widgets for people to consume and like housing and other stuff people actually use in their day-to-day lives. It like we and the Democrats I genuinely do not think are any closer to, like, Trump is assisting in the rampant financialization of everything. He's definitely facilitating it faster. I don't think anyone really has a solution. I don't think anyone has a meaningful, I don't know. You get me.
But we have a number of things going on. We have tariffs going on. We have economic uncertainty going on. We have AI going on. And all those things together have led to a significant slowdown in the jobs market. We even had 1 month, this last month, where jobs may have declined. We don't have those official.
There is no future for this country if the government does not take an enormous amount of wealth out of the hands of the uber wealthy and the speculators and so on. There is no future for this country. The debt crisis on its own, the amount we're paying year over year just on the interest that we're paying on our debt, it's too much to handle. Like, we need a mass reclamation of funds, and all of the money is out there. All of it is out there. There's gold in them streets.
Numbers yet because of the government shutdown, but ADP, the private forecaster, said we lost jobs last month. But let's look at two interesting things. So ADP, which is a big payroll processing company, as everybody I'm sure knows, for the last 4 months, virtually all the job creation has come from big companies, these red boxes here. The smaller companies, all the way down to the very smallest business, 1 to 19 employees, they've actually been losing jobs for 4 months. Some exceptions, obviously, but in total, losing jobs. So small business has really been hurting. The other thing that's interesting, and these are BLS numbers, Bureau of Labor Statistics numbers, is what kinds of jobs have we been creating?
Yeah.
We've been creating jobs in leisure and hospitality, which means restaurants and hotels and things like that. We've been creating jobs in education and health. We obviously
it's overwhelmingly health here. It's overwhelmingly health bureaucracy. More and more middle managers to every doctor.
Our nation putting more and more into health. But everything else, we've basically been losing jobs. So whether it's finance or even information technology, notwithstanding AI, or the profession.
But the thing is, the whole bring back jobs thing doesn't really work. You just make the job. The government can make the jobs. Money is just a denomination of currency produced by a government to facilitate transactions within its jurisdiction. In America's case, because we're the global reserve currency, our jurisdiction is global. But the government, it's just New Deal stuff. Like, it is that simple. There's this like economically illiterate argument that jobs produced don't matter if the government is the one doing, like, providing the job, to which the answer, of course, is why not? Why not? The government pays the wage, and then they have money to spend and so on, and then the money gets taxed, sales tax, income tax, so on, back to the government, and the cycle continues exactly as it would if a private corporation was doing it. The only difference is that the initial money comes out of the government, but if you take a look at the amount the government spends on like corporate subsidies, you just need to tax more. You could afford to do it. You can make these jobs, and we need these jobs, man. Do you have any idea how many people we need to hire just to work on U.S. infrastructure? You could hire, and I'm not exaggerating here, 500,000 young people across this country on an enormous government, make work program. And you could employ them for decades just working on existing infrastructure. You could keep them permanently employed. That's just the most basic idea. That's just maintenance. Wish I lived in North Korea, Messiah.
Like law or business, we're losing jobs at the moment, and we're only creating jobs in these sectors. And so what does all that amount to? It amounts to the fact that more and more Americans are being unemployed for longer and longer. We define long-term unemployment as being unemployed for 27 weeks or more. Yeah. And that percentage is now up to just over a quarter of all the unemployed are now considered long-term unemployed. Put aside COVID, that is the highest percentage since back here in 2016, and it is rising. And so you have more and more people in the long-term.
And the unemployment rate is higher, so it's more people who have been unemployed for longer.
From unemployed ranks. So it's not surprising when you look at these polls that you still find huge percentages of Americans who think the economy is getting worse, not better.
The New Deal was good, but the issue with those public work jobs is that after they ended, unemployment would just rise again. They just don't end them. You don't have to. Again, from a financial perspective, you just need the currency to flow. You just need a high flow rate of currency. Right now, we're going in the opposite direction because every private company has realized the best way to make money is to hype yourself up in the stock market, get massive speculator attention, and then like be the first one to leave with the bag. That's like there's more money to be made in borrowing and investing than there is to be made in producing anything. But the government doesn't need to get involved in that bullshit. We can cut out the middleman. We can cut out the private sector entirely. We don't need to end those jobs. And with the money that we made by taxing people properly, we could have a UBI. We could easily do a UBI. Oh, God, do you have any idea how much money there is out there? Tens of trillions of dollars that could be taxed every year. There's so much money. Tens of just floating out there. We did the math before with the total money supply and stuff. The different levels of money supply where like if you count in all the money held in speculative value, we wouldn't have to start by taxing an extra 10 trillion. We could keep it moderate if we just taxed an extra $2 or $3 trillion a year. And that would still be a big shift. But if we could do that, we could reshape our economy and enjoy a level of domestic production and economic health we have not enjoyed since the 1950s. We could exceed it.
Who think that we're on the wrong track, not the right track, because when you look at the average, ordinary, everyday Americans, they are simply not getting better off at the moment.
Putting your first and third charts together, the explosion of AI costing some of those jobs as well. So big picture, Steve, we were just talking briefly in the break about this idea of a bubble right now in the stock market. And the fears, as Andrew Ross Sorkin, our friend, is writing about in this new book, 1929, and has been talking about, but he's not alone in this, that there may be some kind of a crash coming. What's your sense of
You mean it was the unions, not the racism, that made 1950s better? The unions were part of it, but I really do think it comes down to the velocity of money. The more money the more percentage of a currency, the greater a percentage of any given currency is moving around freely and being spent and used by regular day-to-day people on regular day-to-day purchases, the healthier the economy. That's, I think, for me, that's the number one indicator. And you can see in the post-war America an almost direct correlation between, and all the stuff we've done, quantitative easing, stock buybacks, all the stuff that we've allowed, which on its own seems like, whatever, but in a cumulative sense has contributed more and more and more to a ton of the money in our country just sitting unused in a bubble. Elon Musk isn't spending his like $250 billion. It's not getting used on anything. It's just a gigantic mass, a dragon's hoard of wealth that grows and shrinks based on evaluated value, like estimation. It's not being used on anything. It's not, even when he bought Twitter, he didn't buy Twitter. He leveraged his wealth to get a loan to buy Twitter, because when you have that much money, you never spend it. You just leverage your wealth as collateral to borrow more money to spend it on something else. Why spend your money when you can just use your existing dragon's hoard to justify borrowing more? It's insane.
How big the bubble is and how painful the burst might be.
Stocks are very, very expensive.
But one huge reason the U.S. did so well in the 50s was due to the fact the entire world was fucked by World War II. That can't be replicated. That produced a market for our production. And I agree, that was unique. But nowadays, with the efficiency both of modern industrialization and of the global economy, our ability to meet people's needs and the demand for those needs is greater now than ever. The worth of our currency, the value of U.S. commerce, of what our economy can produce and can consume, is greater now than it was then. I agree that back then there was an asymmetrical demand structure that we took advantage of. But at the end of the day, I do think this comes down to the velocity. Analogy I use for money velocity is the bloodstream. If you have no blood or money, you're done. If you have a lot but it's not flowing, you're done. Yeah, you don't want all the blood in your body to pool in your brain.
They're as expensive as they've almost ever been when you look at it relative to earnings and things like that. There's no question about that. A lot of what's been driving the stock market, as you know, has been what we call the Magnificent Seven, the big technology, mostly big technology companies that are involved in the AI boom. But other stocks are up as well. Look, predicting the stock market is honestly a fool's game. I don't try to do it. I don't think any good investor tries to do it. I personally would be very surprised if we had a crash along the lines of 1929. But it's certainly possible that the stock market will correct in here somewhere. It's had that extraordinary run that we talked about. Has had that extraordinary run that we talked about. And all good things do come to an end. So we could have a significant downturn in the stock market. I don't rule that out, but
it's just grim is all. Bernie Sanders talked about the AI bubble.
Thanks very much for joining me. You know, in the midst of these unprecedented and crazy times, government shutdown, Trump's...
Do you think they're going to get away with it? Who's they? This isn't really being caused just by individual bad actors. The system was always going to produce this outcome. A bunch of people have fed into it, but like at the end of the day, you could put the best people in charge of the modern, highly financialized capitalist economy, and this would still happen. If Bernie Sanders was president and AOC was vice president and you filled every government position up with the best people, if they preside over a capitalist economy that is highly financialized, these outcomes, you can slow them, you can delay them, but you're fighting an uphill battle. You know, everything sinks down to the bottom eventually. It all pools. Radical reform is needed here. And I'm not saying that in a cringe revolution, yeah, like, you know, wave your flags kind of way. I mean, like, mathematically, this is unsustainable. Worth noting, by the way, this is what Marx said. Marx's arguments against capitalism were somewhat moralistic, but for the most part were rooted in the argument that there are fundamental design flaws that will lead to ruin, you know, inevitably. A tendency for the rate of profit to fall, et cetera, et cetera. Of course, Marx couldn't really have imagined how this would all play out, but he wasn't Nostradamus. He was just like a cool fat guy. You know.
Devastation of healthcare in America, climate change, the move toward authoritarianism, the horrific war in Gaza, the growth of oligarchy, etc., etc., etc. I want to take a few minutes talking about another issue of enormous consequence that just doesn't get formative impact on our country and the world. So here is my take. Some of the very wealthiest people in the world, including Elon Musk, Larry Ellison, Mark Zuckerberg, Jeff Bezos, and others, are now investing hundreds and hundreds of billions of dollars into these revolutionary, transformative technologies. Now, why is that? Why are they doing that? Is it because they want to improve the standard of living of the 60% of our people who...
I think I'm probably familiar with the general rhetoric that he's going to provide here. Hold on, I'm curious what the Adam Conover bit was.
So considering that OpenAI is now the most valuable private company on the planet, it's kind of weird that lately they've been flailing around like a tube man in a used car lot. The super secret hardware device they've been working on is on ice due to technical difficulties, and after enormously hyping GPT-5 as the coming of AGI, whatever that means, when GPT-5 was finally released after multiple delays, it was met with scorn and disappointment by its...
I like Adam Bugatti, so Reddit. Well, yeah, he's literally that guy. I mean, that's his brand, you know? I don't know. I think the real interesting question is, what do we do when the bubble pops, right? That to me is because I could look, because, and I hope you all agree, this is guaranteed to happen. We basically get, like, sometimes these economic forces take months and years and so on to build to a point, but like we know there's too much inertia in this direction. Nothing's saving this. There's too much money in the bubble. There's no way this slowly deflates in a rational and non-destructive way. It is going to pop. I have no idea what that would even look like. The erasure of so much wealth. Joey Politano. I like this guy. I know I've said this before, but Joey Politano, I like, he did like a big write-up on the effects of the Liberation Day tariffs that he got really upset about on social media because the Trump administration immediately changed those tariffs, and he had like a little mini crash out, justified crash out. Like, oh my God, what's the point of doing any data analysis on tariffs if they're going to change it like every fucking time I write anything up on it, you know? Yeah, he spent a really long time on it. Trump's pursued the largest trade war in modern U.S. history with one glaring omission. Computer imports remain nearly entirely exempt from tariffs. Or, you know, the AI boom. Exempt from Trump's tariffs, origin, country, product category, computers and parts are right up there on top. U.S. computer investment record highs. The tariff exemption for computers is now so large that it's shifting the entire makeup of the economy. AI companies contributed roughly 0.71% to the 3.8% pace of GDP growth in quarter two, which is likely an underestimate given how official data struggles to capture investment in parts. Vast majority comes from Taiwan. Electricity use. Yeah, I've seen that, Skynet. Yeah, what happens then, like, is at the end of the global economy for a few years. If there's a big bubble pop, well, the first thing that would happen for sure would be everyone's retirement funds would go to shit. Would go to absolute dog shit. And that would be bad. It would annihilate a bunch of wealth for a bunch of industries that have held in there. It would lead to, I don't know, honestly. It's kind of so big, it's difficult to think about. You know? The point where it gets bad is when people stop buying U.S. treasuries. What happened to U.S. treasury yields in 2008? I actually don't know. U.S. treasury yields during subprime mortgage crash. Went to zero, right? Well, my conventional wisdom is that they would go very far down because everyone would just put their money in the government, but let me see. Lowered the target for the federal funds rate from 5.25% to 2%. Well, I guess everyone will buy up a bunch of US debt. Ed Zitron thinks the effects will stay rather localized because of the actual low contribution of AI companies to the real economy. Yeah, but isn't it going to end up being like, look, the same thing happened with Bitcoin, where like the people who made bank were usually the big investors, the whales. And the people who got left holding the bag were like regular people, regular investors. The same thing happened with NFTs and GameStop as well. So I'm thinking, if anything, this just ends up furthering the wealth inequality. You know, the entire market crashes, everyone's 401ks go down, but all the ultra wealthy people still have a fuck ton of money to pull around. Probably still, you know, most of the people who presided over the AI bubble, you know,